Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on the companies we mention. Please do your own research.
Hello, good evening, and welcome to Monday Upbeat Markets with me, Graeme Dickson.
And me, Kevin Hornsby.
Kevin, how are you?
Yeah, I'm good. I've had a few trials in the last few weeks, but I'm good.
Yeah, it seems like you've got, it's one problem after another with your
sure, life's about dealing with problems.
Yes.
Do you know, the second problem was self-inflicted because here's a piece of advice that Phil also gave me on the roast. Don't look at your phone when you're walking down the stairs, okay? It's not a good option. Because you end up falling down the last few stairs.
I've got a habit because being a broker, I'm always looking at my phone when I'm in hotels or wherever it may, just to make sure I'm in touch. So whenever I'm like looking at a stock price or having a conversation with someone, I tend to hold on to the handrail, to avoid that situation. But I know the thing I've been seeing now is in that Egyptian museum, Kevin, that people are doing selfies and video messaging and whatnot and falling into that pond in the middle of the Egyptian museum.
They'll be arrested if they fall into it. I think it won't be good.
No, not at all. So what's been happening in the world of sport and politics? Are you following?
Well, we had an exciting weekend, didn't we? We've had the football. We had, what happened? Manchester City won. Liverpool drew after being ahead against Leeds. It was disastrous. And then Salah came out and said that Liverpool stroke Arne Slot's thrown him under the bus. So, all not good. Arsenal lost to Aston Villa. That means now that Arsenal are only 2 points ahead of Manchester City, and Aston Villa are right up there now as well. It's the only team can choke is Arsenal. I keep saying that.
Yes, I thought Arsenal had a real, big lead ahead of them, but seems to have been opened up the Premiership now.
It's diminished, and Manchester City seem to be winning games by just basically going out there and try and scoring more goals than the opposition and don't care about the defence. But the real two big events of the weekend were the dismal performance by the England cricketers and losing again in the second test. And subsequently, now they're 2-0 down against the Aussies. So this is not good news at all. But the good news of the weekend was Lando Norris coming home in the Formula One Championship. We now have a British Formula One champion in Lando Norris by an amazing 2 points in the end from Verstappen. You can't really take it away from Verstappen. What a driver! He won again. Norris comes in third and basically has enough of a gap so that he wins. So well done, Lando Norris.
Well done.
It's going to be interesting next year. They're taking away the DRS. They're taking away different parts of the way that the racing works. So it's going to be a whole new ball game next year, and let's see where it works. See if Ferrari can actually produce a car for Hamilton next year. Though he's getting older now, so he must be losing something, you would imagine. But let's see how it all works out.
Oh, yeah.
What about you? What were you doing over the weekend?
Well, just on that, before we go on to that, I saw that I was doing a Wikipedia check on Lando, and I see that his father is called Adam Norris and is one of the early shareholders of Hargreaves Lansdown.
Wow.
He was the one who made pensions online on Hargreaves Lansdown. And according to Wikipedia, he's on the Sunday Times Rich List. So that's probably what helped Lando do all the, no doubt about it, coke-hearting and, feeding his his habit, should we say?
Yeah, no, absolutely. I mean, that's one of the things that Hamilton always says, isn't it? Hamilton didn't have huge amounts of money, but because he was so talented, he managed to get the sponsorships and managed to get through. But unless you've got a few brass farthings, you ain't going into Formula One, are you? Let's be honest.
No.
So yeah,
Good on him. Good on him.
yeah, good on him.
Yeah. But otherwise, yeah, no. Relatively got the Christmas tree, so I'm quite happy about that. Sticking with
Very good.
And otherwise,
Did you decorate it? Did you put a star on the top?
No, nothing now at the moment. It's just it's there to be, decorated and
Okay.
and parcelled up.
And then all the needles start to fall.
Yeah, we've already done the first vacuum. So, what about you, Kevin? Is your Christmas tree up?
No, we haven't put our Christmas tree up yet. That's normally wife and kids' job. So
Are you very strict about when the Christmas tree comes down? By the 12th?
I am. But at the same time, here in Egypt, no. I've seen Christmas trees up in March, April, May here in Egypt because they just don't think about it. But no, it's what was it? It's like the 5th of January. It has to come down. I think it is.
12 days, 25th, 12, 6th, 31st. Yeah, 6th of January, isn't it? 6th of January.
Yeah, 5th, 6th of January, boom, gone. Christmas is finished. But yeah, let's see. This year I'll be at the Mediterranean anyway, so I'm not even sure we'll have a Christmas tree there, so we'll see.
Okay, very good. So anything happening on the markets that's catching your eye at all?
Well, there was a big article on Friday last week about our guest that you're about to introduce, and I think it was a bit of a game changer, to be honest, but everybody seems to have missed it.
Yes, yeah, absolutely. It was an article on Friday. I think it was actually the tail end of the article, so maybe that's why it got missed. I missed it until someone highlighted it to me. It was in the Mail online. The company we're referring to, of course, is EnergyPathways. So why don't we make the introduction and talk about the article afterwards? But let's please welcome Ben Clube of EnergyPathways. So Ben, nice to see you. How are you?
Great, and great to be here.
Before we sort of go more in depth with the interview, can you give us a few moments of your time, just explain to viewers who don't know your story what EnergyPathways is all about?
Yeah, sure. So EnergyPathways is an energy transition company, and its flagship project, which we call MESH, is a large-scale energy storage facility which can support the UK's energy transition and generate affordable energy for the UK and provide energy security into the future.
As you know, Ben, I've been involved in this for quite a while now, and when we first started out, it was gas production, then it became gas production, gas storage, hydrogen storage, then it became air compression, graphite production, ammonia production. And some people may argue that this is, from £9 million company, this is, you're kind of biting off a little bit more than you can chew. Is there anything you can say about that?
Well, we set up this company to be an energy transition company, and so the strategy remains the same. Really, what we've done is built on an initial project that we had identified, and we're delivering to that strategy. Now, it is going to be a big project, what we're doing, but the size of the prize is really significant for the UK's energy transition. And first and foremost, the UK consumer is already incurring over £1 billion a year in wasted wind, and that's the prize that we're seeking to address. And that prize is only getting bigger. The government's forecasts estimate that to increase to 6 to 8 billion by 2030. And so the UK energy transition needs a solution, and that comes in the form of energy storage, or in particular, long duration energy storage. And our integrated system can deliver on that. And we think we can bring down energy bills, make a contribution towards bringing down the UK's energy bills.
It's actually been quite well flagged, Ben, about Centrica having issues with its rough storage assets up in the North Sea. What does the UK have up its sleeve to stop having an energy crisis in the future?
Yeah, so gas storage in the UK is a challenge for the UK's energy transition as UK domestic gas production drops off, and it's dropping off rapidly. So by 2030, at least 80% of the UK's gas consumption is going to be imported. NESO recently issued a report flagging the concern here that the UK is at risk of gas shortages in the 2030s, where supply and substantially imported supply cannot meet demand, in particular during winter months. So there is definitely a huge concern here. Now, where does the UK sit with respect to gas storage? Well, it doesn't have much, and as you've mentioned, the major gas storage facility that the UK has is Rough gas storage. The UK has around about 10% of many European countries in terms of gas storage capability, and were the Rough storage facility were it to shut down, it would leave the UK with essentially only 6 days of supply. So there is a requirement to increase the UK's gas storage capability. It will be exacerbated if Rough was to shut down, as Centrica has cautioned. And so EnergyPathways sees an opportunity here to build the UK's gas storage capability, where we think there's ideal geological storage reservoirs in the Irish Sea that can be developed, and we're in the business of developing that potential for the UK to strengthen the country's energy security.
Very good. Ben, in terms of long duration, what is classified as long duration when we're talking about energy storage, and what type of energy would be stored in that long duration?
Right. So long duration energy storage is the sort of the missing piece of the jigsaw puzzle that the Department of Energy is seeking to address to meet its clean power objectives targeting 2030. And what does long duration mean in that context? Well, it's at least multi-hour type storage facilities. If you look at it from this perspective, battery energy storage systems, which is what the transition is relying quite heavily on, the UK's fleet of battery energy storage systems on average store energy for 1.4 hours. So long duration is something more than that. Now, what we're offering up with our proposed developments in MESH is multi-day storage, and that is the big gap where NESO, the Department of Energy, Security and Net Zero, see is the gap that needs to be filled. And you might have recently seen GB Energy announced its strategy last week, and that prioritizes long duration energy storage as an investment area that it is looking to apply its investment funds in.
And what will it actually be stored as?
In the system that we're developing, it's actually a multi-vector system, but principally compressed air, which we'll store in salt caverns. So what we do is we essentially use excess electricity that is either curtailed or is at risk of being wasted or low cost, and we use that to compress air into a cavern that can then be depressurized at a later time to drive a turbine to generate electricity.
So basically, you're squeezing the air in there, and then the pressure of it coming out is then going to create the electricity back again. That's basically what we're saying.
And so because there's two sort of key attributes here which are important, is that we're storing that compressed air in large salt caverns that we'll construct. So this is a capital efficient way of storing a lot of energy at scale. And so that enables us to store a lot of energy, which can be stored for a long period of time. So we're looking at, with this first phase of development with MESH, we're looking at a duration of supply from storage of 7 days.
Okay, and these salt caverns were originally holding gas anyway that we're going to pump out to those salt caverns?
We're going to construct these salt caverns. So it's virgin salt sequence that sits offshore, and it is ideal for constructing salt caverns and it's ideally located to harnessing excess wind power from the grid, and it's also right next to a large number of wind farms where we can source excess electricity from those wind farms.
Okay, so explain to me then, how do we also produce, I think it was 60,000 tons of graphite from this system? How does that come about?
So the other part of our project is the production of hydrogen. As you probably appreciate, a key pillar for the UK's energy transition is the transition to a hydrogen economy to decarbonise energy supply. And so as part of what we're doing is that we're setting up a hydrogen production facility which utilises leading technology for low-cost hydrogen production. And that is with in partnership with KBR Inc., who are effectively the world's largest hydrogen developer, and Hazer Group, who have developed the technology, which is called methane pyrolysis. And what that does is it essentially cracks a methane molecule and splits it into making hydrogen and carbon in the form of graphite. And so by doing that, what we can use the hydrogen for two markets that we can develop for the UK. One, the hydrogen goes to hydrogen to power, which enhances the power generation from our LDOS system. Providing flexible low carbon power into the UK market. And also the hydrogen can be used to manufacture low carbon ammonia for the UK, and the UK essentially imports all of its current ammonia consumption. So, but with that, the great benefit of this technology is that the carbon comes out in the form of graphite, and that is a critical mineral, as announced by the UK government in its critical mineral strategy. And it's a critical mineral because it's key for battery manufacturing, EV batteries, battery energy storage systems, and it's a key component of defence industry as well. And to name just of a number of industries where graphite can be used. So it's no great surprise that graphite is identified as a critical mineral by the UK government, like many other countries. And China effectively completely dominates the current global market with in graphite production and processing. And so having its own domestic production capability of graphite is key for the UK's future energy security.
And that's targeting 60,000 tons of graphite before you even talk about the sale of hydrogen. Would that be the scale of it?
Yes. So the facility, hydrogen production facility, will be producing 20,000 tons of hydrogen per annum and 60,000 tons of graphite.
So I mean, the graphite at $10,000 per ton is 600 million. I mean, obviously, Hazer and KBR Inc. are going to have a cut of that, and obviously there's a cost to production. But I mean, even if you had 10% of that, you'd be talking about a 60 million revenue per annum for this. Is that correct?
Yeah, there's huge upside with the graphite production. You've quoted the numbers. So the current market for high grade graphite, battery grade graphite, is in the order of $10,000 a ton, and all forecasts indicate that the graphite market is growing rapidly, and sources of supply can't keep up.
So what needs to happen next with EnergyPathways?
Recently, or at the end of September this year, the UK government's Secretary of State for Net Zero and Energy Security designated the project a project of national significance. So what that means will we proceed with a government planning approval process specific to such projects, which will be kicking off early in the new year, and that is a sort of a wrap around all the components of our project for getting a development consent order to proceed with the development.
Is there any other part of the project that you can see expanding, or you think we're at sort of these 4 or 5 stages of the project that are going to happen now? Because it seems to have been an ever-evolving project as we've moved forward.
The project we take into the development consent order is a very defined project. It doesn't vary through that process. In terms of potential for expansion for the company, maybe a thing to note is the way we're designing the LDES, or the long duration energy storage system, is being done with Siemens Energy as a modular design, because the market for LDES in the UK is huge, as I've already described, and actually in other countries which have a renewables dominated grid. So that modular system provides significant growth opportunities for the UK. Furthermore, this system that we're designing for the hydrogen production is a modular system that can be applied elsewhere. Again, remembering that we have exclusive rights for that technology within the UK, so we see other growth opportunities to deploy that technology within the UK. We're expecting to see announcements with KBR using that technology elsewhere in the world in the next few months. So I think in terms of this technology playing a meaningful part in low carbon hydrogen production, not just in the UK but globally, you're going to see a lot of increasing evidence.
Yeah. So you can see the MESH project having quite a few babies around the UK and the rest of the world.
Yeah, look, absolutely. So the development of a low carbon hydrogen economy within the UK, with the cost competitive advantage that this technology offers relative to green, and we think also blue, there is a great growth opportunity.
I know you mentioned there about the development consent order, but you also had the resubmission of your application to the NSTA. Is that the same thing?
No, they're separate
They're
processes, separate planning process. Yes. So we recently submitted what's called a gas storage license application to the NSTA, and that license enables us, if we're successful with that application, to construct salt caverns to store either hydrogen or natural gas.
And when do you think you'll get approval from the NSTA?
we're hopeful we could get approval soon.
Soon. Okay. Q1, Q2. Can you not say next year?
Q4, the rest of this year. Nobody's gone on holiday yet.
Yeah.
Don't answer that question, Ben. You don't need to answer the question. He shouldn't ask you that question because he doesn't know. He is a government body, and ultimately he's going to be whatever it is.
The aspect of this project that is delivering on part of the energy transition is the UK government sees hydrogen storage as a critical enabler for the development of a hydrogen economy. The UK government plans to initiate the hydrogen storage and transportation allocation rounds next year, as well as what's called HAR3, which is hydrogen allocation round for hydrogen production. So the company, EnergyPathways, is looking to participate in those allocation rounds, and so that hopefully that gives you a sense of expected timing.
Ben, one last question from me. Do you think, and it's a hard question to answer, I have to say, but do you think that the UK is not exactly helping itself with stopping the oil production, gas production becoming uneconomical in the North Sea? Because we still need this gas. I mean, regardless of your project, it just doesn't seem to make a lot of sense to stab yourself in the back and not have, gas coming from the UK. I mean, you said it at the beginning, 80% of gas is going to be being imported. It's bizarre.
Yeah, look, I think there's been plenty of commentary around the role of gas and domestic gas production. The results of the North Sea consultation were announced at the same time as the budget, and that deals with the ability to issue new licenses going forward. That's the comment I would make to that, is that certain new production licenses can be now issued in relation to gas tiebacks and energy transition type projects. So the potential for domestic production of gas, if it's linked to the energy transition, is now there, and we think we're really well positioned to play a part in that.
So these changes have helped then in terms of being able to use your gas for an energy transition situation, because I think your gas effectively, because of the way you're going to treat it, is actually is going to be carbon neutral. Is that fair to say?
Yeah, by offering up the use of, at the end of the day, the UK demand for gas is going to be there, as you've already pointed out, and for many decades to come. No one's disagreeing with that. The question is, where do you source it from, and how do you use it? And so what we're offering up is a use of gas which is essentially zero emission, because we can convert it into hydrogen, and with no emissions. So it satisfies the direction of the energy transition, and we can produce that hydrogen in a low cost way and use it without generating any emissions.
Ben, you were referring earlier about the UK moving towards a hydrogen economy, but as you've recently noticed, the Storiga wants to pull out of Scotland. BP are now pulling out of Teesside. Where does that leave EnergyPathways? Because EnergyPathways seems to be going full on towards hydrogen, and as well as under energy purposes. Where does it leave EnergyPathways?
Potentially, these projects are being challenged commercially, but what EnergyPathways is offering here is a low-cost hydrogen production solution, and the aspirations of the government is to develop a hydrogen economy, and we offer up bang for buck for the taxpayer funding money to produce hydrogen in the most cost-effective manner. So we remain resolute that that's what can be done here. We think it's a transformational type technology to decarbonize an energy sector. And like I said before, I think you're going to see this technology continuing to manifest itself around the world. You might have recently seen ExxonMobil are effectively switching away from a CCS type solution to this methane pyrolysis. We think that's the direction of the hydrogen future hydrogen economy.
I see in some of your recent RNSs, Ben, that you're repurposing or you're looking to go towards repurposed land in Barrow-on-Furness, and that's presumably with the Hazer. Is it KBR?
KBR, yes.
Yeah. What is this for the purposes of the production of graphite and or ammonia?
Yeah, so the hydrogen production facility that we are seeking to develop, we will be located onshore in Barrow-on-Furness. And we're working on that with KBR and Hazer, as well as Costain, working on suitable locations for siting that onshore facility. So with that production facility, what, as you've pointed out, we'll be producing hydrogen, the byproduct graphite, and also low carbon ammonia.
Because I mean, Barrow-on-Furness is renowned as a sort of nuclear shipbuilding facility or submarine facility, and I just wondered if is there any sort of linkage between the production of graphite and potential uses of that in the shipbuilding industry?
Well, shipbuilding and in particular submarine making, yes, and defence more broadly as well. Yes, so there is very much a defence type market, and again, no doubt you've seen a number of countries have identified from a defence point of view the need to source graphite and finding alternative sources other than from China.
So Ben, one last question from me that's just come up into my head was, you have KBR, you have Hazer, you have Siemens involved, and you have a £9 million market capitalization. Surely one of those is going to look at this company and just say, "Oh, we'll buy that," because then we've got special commitment from the government. It's obviously S35 project of national significance. Well, why wouldn't someone come in and just bid and buy EnergyPathways out?
Well, I think there's a lot of interest in the company from sort of large players and increasingly seeing the significant potential of this project. So, absolutely.
Ben, what's the best advice anybody's ever given you?
I think just to work hard, and that's what I'm doing. And I want to deliver a great project for the UK.
Okay, and the final question from me: what is your favourite food to eat of all time?
Roast chicken.
That's why he's so welcome on the Sunday roast. What do you expect?
No, we don't have many people say chicken on the Sunday roast. I have to say.
But just before, I love Kevin's questions, because we're all human after all. But the thing that I get feedback from various people, and one of the things that's said to me about EnergyPathways is that there is this perception that if you see the polls in the newspapers, online and on television, is that if Reform get into government in 2029 with their very forthright anti-net zero attitude, won't that be bad news for EnergyPathways? What do you think about that?
Well, not at all. So UK's energy transition is sort of essentially hard baked in. The UK has already got established renewable wind generating capacity and developing more. And the problem is right here and now, which is there's significant excess wind power being generated by the UK, which is simply being passed on to consumer bills. That problem must be solved. And so there's a significant market in its own right, let alone whether further wind farms are developed within the UK. And you can't actually undo the status of the much of the UK oil and gas industry trajectory. The basin is in decline. Many of these existing production facilities are increasingly at risk of being cease production, and that means the infrastructure will be difficult to, if at all, be recovered and brought back into operation. So, much of the future is already hard baked in, and if, for example, a reform government coming in, the ability to sort of, let's say, hope that it's all going to be back to the North Sea of the 1990s or the 2000s, that's not going to happen.
If anything, if reform comes in, one, they're not going to start demolishing wind farms, and two, they're more likely to process this further and go further down the line and have more salt caverns to have more storage for the gas, because we don't want to be at the mercy of 80% of our gas coming into the UK and we can't actually get it. So if they're going to think Britain, make Britain great again, then they're going to have storage here, as well as maybe produce more gas here as well. So I think you're absolutely right, Ben. I think it's.
It does seem like a strange thing to be so dismissive towards the wind curtailment when we can actually just store all the wind in these salt caverns. It would make no sense to turn that down.
Well, you think about it. £1 billion the government is spending now. If we don't have any storage for this, within 4 years, it's going to be 6 times that amount. 6 times. It's going to be 6 to 8 billion. And that's probably without any inflation baked in or anything else. Yeah. So the reality is, this is a disastrous situation the UK finds itself in. And if it doesn't do something about it quick, then it's going to be in big trouble.
Yeah, indeed. So that's why GB Energy is there, and that's why they've identified as a priority energy storage is key for the UK's energy future. And look, as you say, no form of government is going to come in and start chopping down wind farms and shutting them down when there's already 20-year or 15-year contracts wrapped around them. So that wind generating capacity is there, will stay there, and the problem still needs to be addressed.
Ben, this is my last question. 6 weeks ago, you raised about £1.35 million at 6p. Since then, the shares are trading around about 4p. Do you think there's any justification for the way the shares have fallen? And do you have any sort of non-dilutive or less dilutive cards up your sleeve when it comes to financing EnergyPathways?
Well, I'm not really going to sort of comment elaborately on that, but we're looking at financing solutions that are intended to be non-dilutive. So, and there's an array that we're looking at. With respect to the share price, no, I can't explain that. In that, since we raised that money, the company's just demonstrated through various announcements that we've been progressing and progressing really well. So it's nothing to do with the company or the project, and it's not a reflection on the considerable value that's been added since that capital raising.
All right, Ben, thank you so much for coming on to Monday Upbeat Markets, and wish you all the best.
Thank you very much.
Okay, that was a great interview with Ben again. So hopefully, he can recover the company and the share price to its former glory. The article that we saw in the Mail it was the Mail Online, was just referring to the fact that BP were pulling out of the Teesside hydrogen project and the carbon storage project, and that's kind of making less projects for the government to focus towards their hydrogen strategy. And I think that there aren't that many candidates out there now, and EnergyPathways, instead of like reversing away from it, they're actually going more and more entrenched into that sort of green. Is it green? I think they call it turquoise hydrogen.
Yeah, whatever bloody color it is, it's hydrogen.
That's the sort of strategy they're sort of moving towards, and it's although it's a more complex story, it's actually very logical. But you just need 5 minutes to have a think about it.
Indeed. But I want to talk about more macro things first before we talk about the stocks. So
Yes.
First of all, I want to talk about the Federal Reserve. It was quietly announced this last week that the Federal Reserve from January is going to start, shock horror, printing money. So they're going to start printing bonds to the value of about 25 billion. And on top of that, they're also going to be doing a further 20 billion, which is basically replacement bonds in terms of bulking up the reserve. So that's 45 billion a month, $500 billion plus next year. That is certain to come into the market on top of what we have. The reality is the dollar is in decline. The other big issue that's going on macro, which people I think are starting to understand, is this trade with Japan. Okay, for a long time, and we're talking decades, Japan used to borrow its money in yen, switch it into dollars, and get an interest rate on the exchange. Okay, so they basically would have taken out Japanese yen, switched it into dollars, and then made 3%, 4%, 5%, whatever they made on the thing. Okay, now the problem we've got now is that the Japanese bond market is now paying 3 point something percent. So now that trade doesn't make any sense. And not only that, you have the instability now of the US dollar. So not only are you not making any benefit from it, you could actually lose on the exchange. So all of this trade is now unrolling, and it's literally hundreds of billions, if not trillions and trillions of US dollars that effectively get exchanged back into yen. And then subsequently now the people in Japan, and why wouldn't they, are investing back in the Japanese market into the yen. Okay. And what does that mean? One of the biggest customers of the US dollar is now not there anymore. So this is going to cause ramifications, big ramifications in the US, and it's already starting to. The dollar's under pressure. The buying power of the dollar is under pressure. And even if you see that the dollar is worth a similar amount to all the other currencies, all that tells us is they're all going down in value because they're all going down in real buying power. And then that brings us to the next point. But go on, have your say first.
No. Well, I think I know what I won't even steal your thunder on that one because I think I know what your next point will be. But on the whole thing, you've got as you say, the printing of the printing money, the bonds, and all positive ramifications for the market on that. And on the other hand, you've got the carry trade being unwound and the departure of those investments out of the US back into Japan. So you've got this sort of push-pull effect. I don't know. I mean, then you got this whole question mark about the AI, but the media's been talking about the AI bubble for 2 years, right? And if you had adhered to everything you read in the media, not everything, but quite a lot of the general sentiment about AI from the UK media, you would have lost out on an awful lot of profit. And they're talking about it again now, that be careful, the bubble is about to burst, and maybe they're right. And certainly we're starting to see evidence of pension funds selling some of their AI stocks. But if they are right on this occasion, then we could see a bit of a bear market, perhaps in the tech, the tech stocks, and perhaps a switch into more sort of defensive stocks and utility stocks in America, which we're kind of starting to see already. And then, of course, we might even see, as Richard Penny, our previous guest on the Monday Upbeat Markets, we had Richard Penny, who's a leading small cap fund manager, saying that there might be actually a switch towards small caps over here because the big returns that you're looking for in the Magnificent Seven stocks in the US perhaps just aren't there anymore, and you need to look further afield. Where else can you look but beaten up Blighty?
Yeah, no, I agree with you. I mean, let's be honest. If those big seven go on a bit of a wobble, everybody's going to catch a wobble for a while. Okay, but what I see happening is a rotational process, and it's already started. If you go back X number of years, and I think it's probably around 20 to 30 years, more than 5 to 8% of the S&P 500 was made up of resource-based stocks. Now it's less than 1%. Okay, now why? Because the solid things are effectively the things that are worth something, not just the technology. And the interesting thing is these are all co-connected because the technology requires the resource to make it happen. Like, what's NVIDIA going to do if it doesn't have enough copper, if it doesn't have enough silver, if it doesn't have enough gold, if it doesn't have enough lithium, etc., etc., etc. The list goes on. So those companies are very, very lowly valued in comparison to what they have and what they have in the ground. And that's without an increase in the share prices that's without an increase in the commodity prices of anything. Yeah. Now, I'm going to talk about one particular thing, and that's silver. And I've become a silver stacker in the last 12 months. On the basis that I read the charts back about 18 months ago, that this has only happened 3 times. Okay, it happened in the early 70s. It happened in the 80s again. And now we're looking at it starting to happen again now, where silver effectively went up 11 times on both occasions. Okay.
In one year, 11 times.
It was a year and it was probably over 2 years.
Right.
Okay. Now, if you put it depends when you start this increase, but let's assume that the increase starts at around $30 or $35. Okay, somewhere around there. We are effectively now knocking on the door of $60 silver. Okay, yeah. So we may have done one of the 11 if this pattern continues, and if that pattern continues, there's many reasons why silver is in a deficit. Nobody's been putting any money into mining silver. Okay, it tends to be mined as a byproduct of copper or a byproduct of gold or a byproduct of something else. Very rare do we find that's a silver mine. Okay, so it's only coming out of the ground if other things are coming out of the ground. There is a material deficit in how much silver is required in the world and how much is physically there. Okay, or physically mined, sorry, not physically there. The fourth thing is that we have been running a market in silver, which is paper, which has been obscene. It's 100 times the size of the physical availability of silver. Now, the story goes that on the COMEX during the Thanksgiving festival, someone said, I want my 400,000 ounces of silver, or 400 million ounces of silver, sorry, delivered in December. The total production of silver in the world is 850 million tons a year. Sorry, ounces a year. So someone on the COMEX said, I want half of the world's production in silver delivered in December. And what happened to the COMEX? The COMEX closed. They shut it down for 10 hours. Because basically, I think they had to negotiate with somebody that this was not physically possible. Okay? So what we've got is we've got this market that is in La La Land, which is basically the paper market. And then we've got the physical market, which is where if you actually have the physical silver, what's it going to be worth? Okay? Now, if these things come together, then we are going to see $100 silver in the not too distant future. We're going to see $200 silver in the not too distant future, as in maybe by the end of next year. The other scenario is that in millennia, there has been a ratio between gold and silver. Okay. Now, historically, like very far back, this ratio was 1 to 15. Okay. 1 to 10, 1 to 15. Now, if you use that ratio today, silver would be how much? Silver would be 1 to 10. It would be $300 an ounce today. Okay. Now, the scenario is that it was over 100 to 1 in the not too distant past. Now it's coming down. It's in the 70s now. Even if we go to the 50s, then effectively what you're talking about is $100 silver. Okay. Now, you're then in a situation where countries have decided to do things like India has decided that you can borrow against your gold and silver. And interestingly, have a guess what ratio they've used for gold and silver.
Guess 50. I don't know.
1 to 10. So India has actually said that the ratio that they will use for valuation purposes for physical silver is 1 to 10. So they're already valuing the silver at effectively $400 and that you can borrow against. Now that's a very interesting thing, and 1.3 billion people are going to be able to do that. That's bizarre. So yes. I am definitely a big silver bull in the next period of time. And I think the miners that have silver are going to do very well. There are plenty of them on the UK market that have the potential to do that. We've got GMET in the US. We've got Ethereum in Morocco. We've got Extract that's got silver in Silver King, as well as the copper, as well Fresnillo, as,
of course.
You got Fresnillo, which is the more pure play of just silver. Now, Fresnillo is up 350% this year. Why? Silver price gone up 100%, because their margin has gone up 500, 600, 700%. You know, from being a small profit to having nearly every dollar that goes onto silver is going straight to Fresnillo's bottom line. So, and these other companies are going to be the same. So, yeah, it's a very interesting time with the commodities. Do I see gold going up in the same way? No, it's not going to go up as quick, but I can't see how, if we're printing money, we're in a situation where we look at the macro position of China and the BRICS nations. 48% of the world population are now saying we want a gold-backed currency, and China are saying we're going to give it to you. So the yuan is going to be backed by gold. That's why they're buying it like they're going out of fashion. And they're looking at 10, 20 years, not 10, 20 months. And they're saying to themselves, well, no, I've read stories here. Gold end of next year could be $8,000 to $10,000. Gold within 10 years could be $40,000. So if you've got that, what's silver going to be worth? Even if we come back to 50 to 1 on a $40,000, it's silver's $1,000 an ounce, or could be $1,000 an ounce from now. So why risk on stocks when you can just go and buy a coin and it could do the same thing and maybe more?
Well, if you're thinking on a 20-year horizon, maybe you want to just take into account how old you are before you make that decision.
Yeah. No, but I'm thinking of my kids, not me.
Of course. You know what? One thing I've been reading, well, not reading, but listening. Elon Musk did a podcast on the All In podcast. I don't know if you've ever heard of it. It's a load of American Silicon Valley types that are talking to each other. And they invited Elon Musk on. And Elon was asked about the future of energy in the US and the world. And he was talking about solar panels. He said that is the future. It's not nuclear energy. It's not, hydrogen. It's solar panels. And one of the key ingredients to make solar panels is silver.
Silver.
So Long John Silver.
30 pieces of silver. It's I mean, I just wish I'd bought more earlier, to be honest with you, but such is life. You've only got so much money.
You got these slabs of it in your home or something, or in a safe somewhere?
Yeah, I couldn't possibly say, but yes. You buy them here anyway in 1 kilogram bars. You can buy them in, I think, 5 kilograms, but I'm not that wealthy, or haven't been that wealthy. And you buy them half kilo, quarter kilo coins. 1 ounce bars. But the most efficient way to buy it is definitely probably in kilograms or whatever. I mean, if you think about it, at the end of last year, if you bought a kilogram of silver, it would have cost you about 800 or 900 British pounds. Today, it will cost you about 1,800 to 1,900 British pounds for the same thing. Right. So that's basically what's happened. Okay, let's go back to stocks. But the reality is, I can see now, and it's starting to play out, that we are in a resource supercycle, and that resource supercycle has only just begun. And you're going to need silver for industrial reasons, and also because we want to protect our money against currencies basically dropping in value. Gold the same, industrial, but not as much, but really as a store of value for governments and countries and very wealthy individuals. Then you've got copper. All of the technology that has to be driven over the next number of decades needs copper. There isn't enough. There is now a shortfall of copper. They're predicting a shortfall this year, and it's only going to get bigger over the next 5 to 10 years. For a big copper mine, it takes over 10 years to get into production, and the production is just not there. It's not there, so it's not going to happen. So copper's going to go up. I don't see how it can't, especially with the technology requirement for the data centers, for the computers themselves, for even India needs to provide refrigeration, cars, televisions, name all the things that we've had in the West for 25, 30 years. Well, in India, half the population hasn't got any of those things. That's 500-600 million people, and a similar thing in China, and a similar thing all over Asia. So just the normal things are going to mean that they need more and more copper for the electricity. Anyway, I'll shut up now. Let's talk about stocks.
Titanium as well. You're going to get white goods, refrigerators. And
correct.
Like
for two reasons really: the defense use of it, and also the major use of it is the titanium dioxide in terms of paint and pigment of any description. And we've got two plays there, which is sovereign metals and Empire Metals, and we agree quite divisively, so we won't talk about them that right now.
Right.
That one we think is going to work, and one might not, and vice versa. But what I would say is it's a required asset. Let's be honest. The reality of all of these things. I mean, one of the good things, if you talk about a niche resource, would be tungsten with GMET. Okay, in the USA, is there isn't another source of it. You know, it's basically GMET and another one that has a resource in the US. They're saying that resource isn't as good as GMET's, and I think they're probably right. The Chinese are trying to get their teeth into the South Korean tungsten stuff so that it can't come to the US. That is military style stuff that is desperately required for all sorts of things: ammunitions, bombs, planes, the whole works. If they don't have that, there is big problems. Now, GMET's been given a grant by the US government already, and probably will be very helpful to get it into production, as in lending them more money. It's going to go on the New York Stock Exchange early next year. I think still got a long way to go. In our money, it's done incredibly well. It's gone from 7p to 100 plus, 145 at one point. Now it's come back down to around £1.05. But it could be 10 times that from here. It could be. You know, so I'm still a big.
I mean, the CEO, he's he's a young guy, and he's made a very good impression. Oliver Fritzen.
Yeah. Well, we had Oliver on a few weeks ago, didn't we? So, yeah, I'm a bull still of it. There's another one called East Star Resources. Again, we're talking more longer term, but East Star's got some fantastic contracts, all in Kazakhstan. Copper. It's got a Snowy project, which is gold. It's got a huge porphyry project that it got a grant for in Kazakhstan as well. But the VMS systems, which is volcanic moss sulfide systems, which is basically where you find almost like a big blob on the surface, and then you go down, and that's high grade copper. It just doubled its resource by finding another one recently. Now, that was actually only an exploration resource. But I mean, they're not just putting that out on the basis that it might be there. It's almost certainly there, but they've got a drill to prove it. Those two things together are worth $100 million. And yet we've got a market cap of probably less than £10 million. It doesn't make any sense.
Yeah. Again, another individual, Alex Walker. I used to know him. He used to be an analyst or a broker. I can't remember the name of the firm based in London. And he's one of the few CEOs who actually lives in the country that they're operating in. You see so many companies where, especially when you're dealing in, quite alien nations, to even from a culture. I think it's Australian, Alex, but he lives in Kazakhstan with his family. He's out there and he's doing his activities, which is you have to commend him for that, because not many CEOs do that.
You do, but he's a big shareholder in East Star, and if it all works out, he's going to become a multi-millionaire from this, and I'm pretty confident.
I take my hat off to him. Yeah.
I've had my differences with him on the basis that I think he's a fantastic CEO, but he messed up raising money twice, and that really messed up East Star share price, unfortunately. But actually, in terms of what they're doing on the ground, brilliant. Can't complain. I cannot see how 1, 2, 3, 4, 5 years from now, East Star won't be worth 10, 20, 30, 40, 50p from here. I can't see it, because the assets they've got in Kazakhstan, it's very reasonable to mine in Kazakhstan, and the people that they've got involved in terms of the deals they've got involved are like phenomenal.
Yeah, no, it's a great country to do business in. Okay. Anything else catching your eye, Kevin? Any specific?
Well, what do you
stock?
think's happening with WECAP? It seems to have fallen off its
Really
stool.
strange. Really strange. So the shares were trading at 3.5p. Maybe I think they may have even gone over 4p at one stage, and they're now sort of languishing around about 1.9p. Yep, their underlying. Oh, is it 2p? Excuse me.
Around 2p.
The underlying investment is still very much intact at about $125 per share. This is WeShop. They own, I think it's 11.8% of it. I think one of the things that I think may have caused the price to fall recently is the fact that there was a statement from WECAP highlighting about this issue with a bond, which is due to be repaid in May next year, which is about just under £7 million. And I think, perhaps there were some people that weren't aware of it, or some people were just reminded about it. That it is a sort of the elephant in the room that needs to be sorted out. And perhaps some people just didn't like it and sold, perhaps. I can't think of anything else. I can't think of the WeShop share price has been relatively stable compared to WeCap.
Yeah, it's been pretty solid, hasn't it? $120 to $150, which would mean that I think that would mean that the WECAP.
Yeah, I've got a table here. Just bear with me. I'll tell you I'll tell you what the price equivalent would be.
I think it's about 30p, isn't it?
It's 26.17p at on $126.61, which is slightly under that. So call it 26p.
So 26p. If we take
the debt,
we take 6p off for the debt, and we then
that includes the debt. That's 26p.
Okay, that includes. Okay, so what I've been saying is it should be trading at a 50% rate on the basis simply on the basis that it's still got 10.5 months or whatever it is, 11 months to go before they can actually sell the stock. So at 50%, that would be a 13p share price, assuming WeShop doesn't continue to do well in the US. What I saw was, and I had this experience with a couple of people I know signed up. And not only did they sign up, they then sent it to 12 or 13 of their friends to sign up for referrals. And because then you get paid on the referrals. Now, you only need a small portion of people to do that, and this whole system will work. I mean, even on the boards, I saw people signing up and buying products. It's one of those snowballs, isn't it? If it works, you could see WeCap shares of $500, not $125.
There is literally no. You just what it requires, in my opinion, Kevin, is a lot of marketing to let everybody know about this. There's the virality of you referring your friend who refers another friend, and it just sort of has that virality side of thing. Then there's the other thing of like the influencers and just general advertising, just to general awareness, and to remind people that have downloaded the app to go and bloody use it, because I sometimes forget to use it. You've got to break a habit. The habit is just buy everything on Amazon. It's so easy. It's very convenient, but it's so easy. I mean, if you want to buy fashion, do you go to Amazon to buy your clothes?
No.
No. Most people use a different website, and so or just shop physically. On the
on that note, I'm not sure what fashion is, to be brutally honest with you. But anyway.
Well, you're in a country where maybe fashion's a lot different to what it is.
There's nothing to do with the country. I just don't bother.
Fair enough. They'll probably think you're very in vogue. So yeah, I just think that you just have to remind people. Like, for example, there's 10% share back. Where you get 10% of your purchase in shares in WeShop, and it's just I could just literally physically buy this product down the road, or I could order it online and I get 10%. So why would I not do that? Because I'm going to still get the same outcome.
And you can buy your holiday, you can buy
Insurance.
if you can buy the things that you're naturally going to buy and get a benefit from it. So I think as a concept, how is it not going to work? I mean, it's really I think it's got a good chance. So let's see what happens anyway over the next period of time. I mean, one of the other things, the AGM was this morning for Bezant Resources, all passed, all cleared. Colin Bird was then given a presentation about length of time to mine. I think we're going to have a mine in production in the summer of 2026. This is going to start producing cash. So tell me why it's only worth £12 million when it's going to be producing probably 30 to 40 to 50 million pounds of cash flow from next year. How's it worth 12 million quid?
Okay, all right. Let's be candid. Right. First of all, what country are they operating in? Zambia. Is that right?
Namibia,
excuse me. Okay, all right. Namibia. Yeah, in general, you've got the African discount. There is a little bit of reservation, shall we say, about dealing in Africa, because you're always worried about corruption and resource nationalization, things like that. There's always that element. Although I think Namibia is probably in the good
I think
books.
Namibia, it should be minor in Namibia. It's never happened, or hardly has ever happened, maybe never. I think if you were in Zambia, you've got an argument. If you were, because they've done it before, so you can sort of look at that and go, oh, this might not work. But it's not even the short term with Bezant, because you basically got to look at the fact they've got 17 kilometers of strike. It's all VMS, just the same as we discussed with East Star Resources. So if you find it, it's there, and then you dig it up, as in you have an open pit. So, this is an open pit operation. It's not an underground mine for copper. I'm not suggesting for 1 second that it's without risk, but I think majority of the risks have now been mitigated, and it should be worth 30 or 40 million pounds now, in my view, just purely on the potential. It's worth 12. That doesn't make any sense. But a lot of things don't make any sense. I mean, WECAP to us doesn't make any sense. Why have we got effectively from what you said, 26p to now 2p? We're less than 10% of the potential value. Why? That doesn't make any sense at all. And you could argue about East Star Resources, exactly the same thing. You could argue about Extract Resources, exactly the same thing. You could argue GMET has, in a way, in the US and on the UK market, has broken the mold a bit, because it has gone up to a value of a couple of £100 million, and it hasn't done anything yet. Obviously it has, but you understand what I'm saying. It hasn't actually produced anything. So is that the opposite of the jurisdictional risk you're talking about? Because it's in the US.
Yeah. I mean, I think if you're operating in Australia, US, arguably the UK.
Okay, so my argument then to you would be Extract Resources, Bush Ranger, 1.3 million tons of contained copper, Australia. It's in Australia, and now it's being valued at less than zero in Extract Resources. How? Why? It doesn't make any sense. Once copper goes above 10,000, it is viable. Copper is currently $11,500 per ton. It's viable. Okay. So if we start to see copper go to 12, 12.5, 13, you've suddenly got an asset in Extract Resources that's valued at zero right now that could easily be valued at 50 to 100 million US dollars. Easily. and maybe a lot more, because copper is going to be massively in demand. 1.3 million tons with the chance to expand it is not, without. There's not many of them, if hardly any, in the world. Sorry, I should say. So yeah. Anyway, the last one I want to talk about is Delta Gold Technologies. Did you listen to the interview yesterday about Delta Gold Technologies?
I listened to it. Yeah, that's very good.
And what were your thoughts?
I just thought it's, it's all like the appliance of science for me, Kevin. So it's like I'm literally, I just have to believe what he says, and it's very early stage, but he sounds very convincing. But I'm not an expert in quantum computing, whatsoever.
I think the interesting thing about the whole principle is that they've gone about it on the basis that let's get the best brains in the world involved in this. We'll pay for them and get all of the IP. If anything works, this company is going to be worth hundreds and hundreds and hundreds of millions of pounds. So is it worth in inverted comma, having a gamble at a market cap of £7.5 million? That's it. That's it in a nutshell. If you want something that could do 100 times, 200 times, then Delta Gold Technology is something you should be looking at, and have a listen to that interview. When I met Michael Jones, I was very impressed. This guy is very, very smart, very wise. And I think, putting money in his hands to make this whole situation work and work better. And we've got Oliver Friesen in there as well. You've got Mark Burnett, who's in there as well. He's from Rab Capital. He's part of the board as well. You've got Jamie Tosh in there. Yeah, you got Jamie Tosh in there, who's been involved in lots of these different things, including GMET, Power Metals, and now this one. And Jamie Tosh was also principal in SWC, Smarter Web Company.
Oh, really?
So yeah, he was involved in that quite heavily, doing a lot of the work before it actually listed. So you've got an amazing team of people in there. Okay, also that I think should make sure that this thing does what it says on the tin, which is to get all of the best brains that they can involved, so that they can then generate something that's going to hopefully work. And even a small bit of this, as they said, the Gilead, I think it was, or Gilead, was sold for $1 billion recently from Oxford University.
Right.
And it was a small switch that was something to do with the qubit. So anyway, I'll leave that one.
Why do you think a business, is it sort of emanating from the University of Toronto? Why did they list over here as opposed to the Canadian Stock Exchange?
They're listed over here because Michael now lives over here in the UK, and because he was sitting next to Oliver Friesen in the GMET office. That's why.
Simply because that's the reason why. Okay.
They live here and they do it here. So those four people were all working together on GMET. So the GMET connection is massive. Like, it's directly out of GMET, but it's not GMET, quite obviously.
No. Yes.
But that's the reason. Michael,
Sorry.
I met Michael about 7 months ago when they were starting to talk about doing this, and he explained what they were trying to do and how they were trying to do it, and they were just signing up around Toronto University at that time. So there was a pre-IPO where they got the money to secure Toronto University. So that's already began 7 months ago, and the work has already begun. And then subsequently now come to IPO on Aquis. Oliver Friesen, Jamie Tosh, who I've just got to know in the last few weeks, and Mark Burnett, who I only met last week, all heavily involved.
He's very impressive. I don't know Jamie, but from what you said, his reputation precedes him. I this thing with the Smarter Web, which I've been very impressed with Smarter Web. How they've gone so professionally about their business. Do you see like a similar? I don't know what their magical ingredients were to get such a brilliant performance, but do you see that? Is Jamie got that sort of? Does he have the magic formula to do it again at Delta?
Maybe not in the same way, because I think they're actually building. What happened at SWC for me was a real belief that they were going to create immense value, and that hasn't really materialized yet. Whereas this, I think it could create real value, as in somebody's going to come and buy it for a lot of money. But it's very tightly held. More than 80% of the stock is either in the owner's hands, as in the creators, in SEIS, in EIS, and in lock-ins. So 80% of the stock tied up for at least 12 months.
Where
and then
is
12
it
months.
Trading at? Where is it trading?
It's trading around the 13 point something pence mark. But
IPO at 10p, is that right?
Yeah, any buying, and I think we will double the IPO price. I think it will be 20p in no time, to be honest. It's not gonna take a lot. I think there's hardly any stock available. There was quite a lot of stock bought on the market last week for anybody sort of who wanted out of what they had. I think those people have gone, and we'll see what happens. But for me, forget about the share price for now. If you want to put the best brains in the world and connect them all, so they're not just independent, which is their idea, this could be something that could be anything, not just quantum computing. They could find something else that matches. And a university in the Americas matches with a university in the UK or anywhere else in the world, and then they start talking to each other and helping each other because they're in this scenario. This is going to produce something. That's my view.
Very good. Well, on that very happy note, thank you very much for listening, and don't forget to like and subscribe. And remember, mum's the word.
This podcast was brought to you by Monday Upbeat Markets. If you would like to appear on a future episode of the Mums Podcast, please email mondayupbeatmarkets@gmail.com.